Welcome, everybody, to the Peaceful Presence Divorce Coaching Lunch and Learn series. Today's topic is about rebuilding your finances after divorce with the lovely Morgan Brown. The Lunch and Learn series is a twice monthly series of conversations with experts to help us navigate the journey and heal and make life in divorce a little bit easier. And I just want to introduce myself. I'm Kat Climaco, founder and lead divorce and custody coach at Peaceful Presence Divorce Coaching. And throughout today's conversation, if you have questions, just put them in the chat and our lovely moderator, Shruti, will send them over to me. And at the end of today's conversation, there'll be a time for Q&A. Just a little reminder that today's session is being recorded for those who couldn't make it live. And with that, let's go ahead and get started. Morgan Brown is a financial coach and the founder of Your Money Project. She helps people create clarity, confidence, and stability in their financial lives. She's especially passionate about supporting women as they navigate major life transitions like divorce and rebuild their financial independence. So, Morgan, thank you so much for being here. Finances are the biggest, I think, stressful thing about divorce for a lot of women I work with, besides the custody piece. So, yeah, the money and the kids are, the two highest stress. So thank you for being here.
Yeah, absolutely. My pleasure. Hi, everyone. Welcome. I'm thrilled to be here with you. Today's webinar is titled Money Stability in the Next Chapter, Rebuilding Your Financial Life After Divorce. And thank you to Kat for having me. Today's less of a presentation and more of a conversation. So feel free to ask questions throughout the presentation as we go along. And then, as Kat mentioned, there'll be time for Q&A at the end as well.
Thanks, Morgan.
So if money feels overwhelming right now, you're not alone. This webinar is not about solving everything right now. It's about finding your footing, one clear, manageable step at a time. First, I wanted to start by introducing myself. As Kat mentioned, my name is Morgan Brown. I'm a certified financial coach. Long before I became a coach, I was a real estate investor. I'd quit my job to do that full time and quickly got in over my head. I was over $100,000 in debt, and I had very inconsistent income and had to make ends meet. I began to study finance and put together systems that would help me pay off my debt and build wealth. Now I help others do the same by creating money systems that take the stress out of day-to-day money and help create stability and predictability when life feels anything but that. My niche is working with people that have variable income or uncertain income. And as Kat mentioned, my passion is working with women navigating life transitions, helping them find clarity, stability, and a path forward.
Morgan, I did not know that about you, that you were $100,000 in debt and worked your way out of that.
Mm-hmm.
So just for, those here and listening, many of us incur significant debt trying to protect our kids in family court.
Yep.
I've met women who've spent $1 million of their life savings in family court. So if it's not specifically in sort of the conversation that you've prepared, I think hearing some strategies for how to get out of debt like that, specifically, I'm going to have some questions for you at the end about that. That's amazing.
Yeah, absolutely. I'm an open book. I'm happy to share how I did it. And then of course, that's what I help people do now. So I've got tons of strategies.
Amazing.
But yeah, we can revisit that at the end. So what brings us here today? If you're on this call, you're likely going through a divorce or maybe considering a divorce. Either way, you're carrying a lot right now. Divorce creates both emotional and financial upheaval at the same time. And it's worth noting that how you're feeling is completely normal. Please know that survival mode is real. Your brain is working overtime just to get through the day. Decisions feel harder, and that's not a weakness. That's just the weight of uncertainty. And you're not behind. There's no timeline that you're supposed to be on. Today's goal, and I want to stress this, is that you don't need a perfect plan. You need stability first. And what do I mean by that? Today, we're not seeking perfection. We're not trying to optimize every dollar or get the best ROI. You don't need to have all of the answers. You don't need to have your 10-year financial roadmap mapped out right now. You just need to know the next right step. Small, grounded progress is exactly enough.
That's amazing. Yeah. I think you're probably going to get into it. So let me just have you go ahead. But there's a little piece that I wanted to chat about with that, with like knowing the whole plan and just starting with the next right step.
Yeah. Yep. So why does money feel so overwhelming during divorce? Let's be honest, even on a good day, money decisions are emotional. Even more so during times of uncertainty, trauma, and transition. You're not only making financial decisions, but you're making life decisions at the same time. And it's a lot.
Mm-hmm. Yep.
But your brain is doing exactly what it was designed to do. When life is disrupted, the mind shifts into protection mode. Fear, exhaustion, uncertainty, they don't make you bad with money, they make you human. Fear is here. This is what I hear from clients.
Mm-hmm.
What if I make the wrong decision? Fear of getting it wrong freezes even smart, capable women. I should know this already. Many women feel embarrassed by not knowing all of the answers. I have to do this perfectly. Pressure to do the right thing adds to the overwhelm. And maybe this is all new to you. If your spouse used to manage the household funds, this might be all new to you, and the learning curve can feel really intimidating. And I would add too, sometimes I hear, I know the right thing to do, but I'm having a hard time pulling the trigger.
Mm-hmm.
If you
Yeah.
have any of these thoughts, I want to assure you that there's nothing wrong with you. This is a completely normal response to an abnormal situation. One of my favorite quotes by Maya Angelou is that she says, do the best that you can until you know better. And then when you know better, do better.
That's great. I love that. I think for so many women that I encounter in this space, it's not only what if I make the wrong decision, it's I wasn't allowed to
Mm,
manage any of the finances. Like so many, a shocking number of the women that I work with and that I encounter say, I literally had no control of the money. I wasn't allowed to see what we had. I was given an allowance. I had no control. I don't even know what exists,
right.
right? So then suddenly they're thrown into this situation where all of a sudden it's not just the idea of, okay, well, now I have to learn how to do day-to-day financial decisions, make those
Mhm.
decisions and budgeting. But now I'm trying to figure out like, okay, if we're going to sell the house, do I buy a house? What do I do? Do I rent instead? What do I do with, I mean, there's like not just day to day money decisions that are intimidating and confusing. It's literally like the biggest financial decisions you'll encounter
Yeah.
all rolled into one situation. And then you're probably in fight or flight mode, right? With the trauma happening. So your executive functioning is offline and it's
Mhm.
just emotion driven decision making. And so it's just a lot all at once. And
Absolutely.
yeah, just giving yourself that grace. I should know this already. That was me at the beginning of my divorce as well. So yeah, that's really common.
Um, yeah, no, you're absolutely right. I mean, it's every emotion tied up into a ball, and everything's heightened too.
Yeah.
But yeah. Um, so when traditional money advice doesn't work, so just know that you don't have to follow every financial rule right now. Part of what I do as a financial coach is I help people discern between what they should be doing and what they actually should be doing to meet their goals. And it's even more so in this when you're in a state of flux. So the rules were written for stable situations. Common financial advice assumes that you're in a steady state. Life transitions require a different approach. One that prioritizes emotional safety along with financial security. During times of transition, stability matters more than optimization. So traditional advice may not work. Stuff like never touch your retirement. In a perfect world, you don't touch it, but sometimes you have to. Just
Mm,
know the risks and plan accordingly. Pay your credit cards in full every month. Maybe you're in a season in life where you need to lean on your credit cards a little bit, and that's okay. Down the road, you can come up with a plan to pay them off. Invest 10 to 15% of your income. You may need to pause investing and focus on building stability at this point. Holding cash is okay. If it helps you breathe easier, keep cash liquid in case you need it. Waiting to make major decisions, there's no reason to rush into a big decision. Creating breathing room is a strategy. What other, do you know, what are some other traditional advice that you guys hear?
Yeah, first of all, I just want to say that I feel like there was a collective exhale when reading through that list. I think the first two were the biggest for me, right?
Mhm.
This financial advice was hammered into me, excuse me, growing up during the marriage, right? Don't ever touch retirement. Never, ever. Pay your credit card bills in full every month. And I think feeling like, because I didn't have a you at the time, I wish I would have, feeling like it was okay not to follow those rules during the divorce would have just alleviated so much stress,
Yeah.
because again, for a lot of women, some people divorce is easier and there's just a natural split and it's never easy, but easier than a lot of the families that I encounter. For a lot of the people that I encounter, they don't even have access to half of the marital estate until like 6 months or a year out, because they're just
Mhm.
not granted access to it, right? So like this one is a big one, right? Don't lean on your credit card bills. And that's a big one that I hear people saying, I have to put everything on credit cards right now.
Yeah.
Like it's just a requirement. I just don't have the cash funds. So I have to do that. People pull money out of their investing accounts and they're really
Mhm.
worried about it. And then just like saving for retirement, there's people I know, I have had to take a big pause on this myself. And this is a really common thing that I hear from women in divorce is they just have to pause saving for retirement completely. And that creates so much stress. Like, oh, I'm in the highest earning years of my life in my 30s and 40s. And if I pause saving for retirement, I'm never going to get back on track. Right. So what are your thoughts about that one, especially?
It's again, I think you want to know your situation and make educated decisions, but know that you've got options. So, I mean, if you end up touching your retirement, that's okay. Just know what the penalties are, know what, if you have any time to repay it, and then get a plan in place down the road once you've stabilized a little bit to catch yourself back up. But like I said, sometimes you have to make those trade-offs, and just knowing that there's other options other than traditional advice, and that there's somebody in your corner saying, this is okay. You have to do what you have to do. Let's make a plan to get you back on track.
Yeah, I love this. People should all over us, right? Especially in divorce. And I love that that's just gone with you.
Yeah. Yeah. When I'm working with clients, anytime you hear the, like, I should be doing this, that's a moment to pause. Like, but is this really what it works best for you? Is this going to help you meet your goals? Does this meet you where you're at right now? And that's really what you need to be asking yourself.
I love that, Morgan.
So financial stability is more important than financial optimization right now. We just touched on that. Give yourself permission, give yourself the grace to operate differently during this season of life. Focus on what you can control. Control creates calm. And when everything feels uncertain, narrowing your focus to what's actionable is one of the most powerful things that you can do. So what does that look like? 3 areas of focus that restore stability. Understand your financial picture. Know your income, expenses, assets, and debt. Clarity, even when the numbers are hard, reduces fear. I tell my clients that just knowing their numbers reduces 90% of financial anxiety.
Mm-hmm.
Create a simple spending plan. Focus on essentials first, and just having some predictability is extremely calming. And then build a financial safety net. Cash reserves, emergency fund, protecting your credit, all are going to come before investing or any long-term strategy.
Yep. So I just have a quick question for people who may not know. So understand your financial picture. You said expenses, income, assets, and debt. So expenses are obviously what your day-to-day bills, what you have to spend on a monthly basis, minimum, right?
Yep.
Okay. Income is what you're bringing in on a monthly basis. Assets and debt. Do you want to talk about sort of what those are? What's considered an asset and a debt?
Sure. Yeah. And real quick, with your expenses too, I break everything down into your fixed expenses and then your variable expenses. So your fixed expenses are most of the time are your essentials. So it's going to be your rent or mortgage, your utilities that you need to keep the lights on, those types of things, insurance. And then your variable income, that's more like your grocery shopping, dining out, shopping in general, that type of thing. So I think it can be really helpful to break out those your expenses into two different categories, because then you know kind of what, like your break-even number, so to speak, like what you absolutely need to keep the lights on, and then what you need above and beyond that to, be living life.
Yeah. And so sort of your discretionary spending. So if you're like really in a pinch, you're like, okay, these are the areas where I can cut back for now until I'm more stable. I like that. Okay.
Exactly. And then assets you were asking about, and actually I'm going to dive into this a little bit more.
Great.
So why don't I keep going, and then we can circle back if I don't answer your question.
Yep.
So understanding your financial picture. So get really clear on what you have and what you owe. This isn't about judgment. It's just about seeing the full picture so that you can make grounded decisions. Remember, clarity reduces fear and anxiety. Ignoring the numbers will only make it harder. So income, you want to add up all of your income. So wages, child support, if you have any side business, side hustle type thing, alimony, etc. Any income that you have coming in. And also, I think it's important to understand that post-divorce, your income will likely change. Sometimes you're getting child support and alimony. Sometimes you just take a reduction in your income, but you need to be estimating with the new income amount. Expenses, like I said, that you've got your fixed expenses, which are, rent and utilities, rent or mortgage, utilities, car, insurance, childcare, et cetera. And then you have your variable costs or your discretionary spending. Assets, so that's going to be anything like savings, property, retirements accounts, vehicles, those types of things. And then debt would include, credit cards, student loans, mortgages, car loans, et cetera.
So here's the question that I get all the time, Morgan.
Mm-hmm.
If I own a home, but I still have a mortgage payment, is it an asset or a debt? So how should I be treating that?
So you would take the value of the home minus the liability.
Okay.
So if the house is worth 500 and you owe 300 on it, then you've got 200 in equity.
Perfect.
Creating a simple spending plan. You don't need a complicated budget. You just need a plan that covers the most important things. Start with what matters most and then build from there. When you know your essentials are covered, everything else is going to feel more manageable. So start with the basics. You need a safe place to live. You need food to eat. You need insurance for safety, utilities to keep the lights on, transportation to get to and from work, and you need to be able to cover your children's needs. But you don't need an app. You don't need anything fancy. You can use an Excel spreadsheet or even just a piece of paper. Build a financial safety net. So before investing or tackling any long-term strategy, focus on building a foundation of security. This is important for everyone, and even more so for someone going through a transition period. Cash reserves in your checking account. Keep cash on hand for unexpected needs, more than you might during a typical stable period. This will prevent you from overdrawing your account and just give you peace of mind. Emergency savings in a high yield savings account, even a small fund of $500 to $1,000, will create a meaningful buffer against unexpected. And we'll talk about high yield savings accounts a little bit more in just a moment. Protect your credit. So reviewing your credit report and monitoring your credit report is important. You can get a copy of your credit report by going to annualcreditreport.com. Or even Credit Karma, something like that. But you may need credit in the near future to get a rental background check, a car loan, et cetera. So it's important to stay on top of it. And then financial independence. So opening accounts in your own name and establishing your own financial identity is a foundation for rebuilding. So safety first, strategy later. You'll have time to optimize down the road. Right now, just focus on getting solid ground.
So I have a question for you, Morgan, about protect your credit. So like previously we were talking about lean on your credit cards if you need to.
Yes.
How do you protect your credit when you're leaning on your credit cards?
Well, lots and lots of people carry credit card debt, first of all. And protecting your credit doesn't mean that you can't use your credit cards. It just means I would protect your credit so that you're not, let's just say you have an ex or, a soon to be ex, you wouldn't want to be opening any new credit card. He wouldn't, protect yourself from any identity theft or, opening new cards and that sort of thing.
Yeah. And that like veers into a whole nother realm of like legal and ensuring that, your assets and debts are all considered. And then when you're actually divorced, the financial ties are separate. So,
Mhm.
if you have an ex-partner who spends irresponsibly, they're not dragging you down with them. Is that what you're kind of talking about? Yeah.
Exactly.
Okay. And just one question about that. So like if you can't pay your credit card every month to
Mhm.
protect your credit, what do you do? Do you just make the minimum payment every month? Is that how you manage that?
Yeah. Yeah. So, ideally, you can just make the minimum payment. That's going to keep your credit in good shape. To optimize your credit score, you want to stay below 30% of your total credit available. But again, if you need to lean on it, maybe that's just the season of life that you're in, but at least pay the minimum on the credit card on time. And that will actually work in favor of keeping your credit good.
That's great. That's a great balance.
I also might add that one of the things that I would recommend is locking your credit. So I don't know if you even know this is a possibility, but you can go to the 3 credit bureaus and you can lock your credit. So no new accounts can be opened in your name. It's free to do. It's just an easy way to protect yourself.
That's brilliant. I had no idea that was a possibility. So for everyone out there who's going for a divorce, is preparing to go through a divorce, even if you're in the middle of it or post decree, wherever you are, lock your credit.
Mm-hmm.
That's huge, Morgan. That's a great tip. I never even knew that existed.
And there's 3 credit bureaus. So you would want to go on and do it with all 3.
Okay.
To protect yourself. And then when you go to use your credit, so if you go out and you're buying a car, you just go in and unlock it, make the car purchase, and then you can lock it again.
I'm writing that down. I'm doing that. I'm going to do that today after our conversation.
No, do it. And by the way, you also can do your kids.
Oh, that's amazing.
Yeah. So it's just it's tied to their social security number.
That's great because I do hear a lot of horror stories about abusive parents taking credit out in their kid's name. Yeah, I had no idea that was even a possibility to lock your credit and your kids. That's a huge takeaway.
Yep, cool. All right. Okay, so a high yield savings account. Kat, you and I have talked about this in the past, but I love high yield savings accounts. I have all of my clients open them because I think they're so great. But you save smarter with buckets inside of your high yield savings account, and you can watch your money grow. So a high yield savings account isn't just a place to park your money; it's a tool for building your future. I recommend Ally Bank because they offer the bucket features. There's lots of high yield savings accounts out there. And there, a lot of great ones, but they don't all offer the buckets. And basically a bucket is just, you can set up like almost mini goals inside of the one account. So you don't have to open multiple accounts, but it's all in the high yield savings account. So it's earning more interest than a traditional savings would. And it's kind of out of sight, out of mind. And it's just a great way to make progress towards your goals. So, some goals might be, you might be saving for a home down payment. So you can build towards a space of your own, one deposit at a time. Maybe you're saving for a new car. You can plan ahead so that the car purchase doesn't derail your budget. Maybe you want to plan for a vacation, give yourself something to look forward to without the guilt. Or irregular expenses, home repairs, medical bills, annual fees, just anything that sneaks up on you. But by planning ahead, there's no more surprises. And it's incredibly empowering to have that money to anticipate those expenses and have the money set aside ahead of time. It's very cool.
I love this concept, Morgan. I think I've asked you about this 2 or 3 times because, and especially for people going through divorce, if you're new to creating a budget, if you're new to managing your finances or trying to save for big things like your child's college fund, right? Yeah. Whatever it is, or you want to save to go back to school to get a degree after your divorce. This really makes it concrete. Again, especially for people with those executive functioning challenges that go with, the sort of the trauma of going through a high conflict divorce. This makes it really concrete. I know that I'm going to put in X number of dollars every month toward this, or I'm going to save toward this one first, but I'm going to create that bucket for education so that I remember to do it later, right? Sort of like a roadmap. And in your experience, can you set up automatic transfers into these accounts on a monthly basis to sort of stay consistent?
Yeah. Yeah,
Okay.
automatic transfers, and then you can even set up or automatically have it distribute to the funds that you want it to. So you can say, I want X amount to go towards my, tuition fund. I want X amount to go towards my home repair. I want X amount to go towards whatever.
That's so smart. I love that. Because the idea of like one savings account with one big number, it's really hard to sort of separate it out in your brain in a moment's notice, right? It requires more spreadsheets. It requires more tracking, more thought process. This seems so simple.
Yeah, it is. And it's visual, and you can set individual goals for the different buckets and stuff. So it just makes it less mental gymnastics, makes it easy, visual, and frankly, kind of fun.
That's great. And you have a link toward Ally Bank, right? That you can share with us?
I do.
I will put it in the YouTube notes after the conversation so people can access that.
Okay, cool. Let's see here. Yeah, so the next chapter, this is not the end of your story. This is an opportunity for you to start a new chapter and build the way that you want it. Divorce can feel like everything is falling apart, but within that disruption lies something powerful, the beginning of rebuilding on your terms, with your priorities, at your pace. You don't need to figure out the next 10 years. You just need to take the next right step. Small steps today, even one action, opening an account, writing down your expenses, builds momentum. Stability tomorrow. Small steps taken over time create the financial footing you deserve. In independence, financial freedom is built one decision at a time, and you're already making them. Money, stability in the next chapter. You're not starting over. You're starting from a place of experience, strength, and hard-won clarity. Focus on what you can control, your financial picture, your spending plan, and your safety net. Build stability first. The strategy and growth and thriving all will follow. And then,
I love that, Morgan. Thank you so much. So I already have several questions, but can you help me understand first the difference between a financial coach and a financial planner or advisor?
Yeah, I get that question all the time. Financial advisor is going to help you manage your wealth once you already have it. So they're going to help you optimize your stocks and get you ready for retirement. A financial coach helps you more with the overall strategy and day-to-day workings of your money. So like I said, I set up systems to help everything work smoother, help you hit your goals faster.
And you don't have a minimum, like I know a lot of financial advisors will say like you have to have a minimum of, I don't know, $300,000, ready to invest to work with me. That's not how you operate, right?
No, it's not. There's no minimum. And I have recommendations for financial advisors that don't have a minimum.
Yeah, that's great. That's good to know. Thank you. Okay, so I had this question written down, but you already answer it. What is the, typical advice you should ignore? So we covered that. That was hugely helpful. Let's see. If someone walks away from this conversation remembering just one thing when it comes to money and divorce, what would you say based on your experience working with women? What would it be?
Oh gosh. And we did not talk about this during the presentation, but I would really encourage women that are in the process of divorce to, and Kat, you can probably speak more to this, but just trust but verify everything. I work with women, not so much during the divorce process, but after the fact. And a lot of times women come out of it having a lot of baggage that they didn't know that they were going to have.
Yeah.
So during the divorce process, I think it's really important to have people in your corner, a coach, a lawyer, to make sure that everything goes as smoothly as it can. And just, trust but verify everything. And then the next step after the divorce is finalized is just, like I said, kind of rebuilding yourself financially, opening your own accounts, making sure that he does not have access to your accounts. so changing your passwords. You don't want him to have electronic access to anything.
That's a big one.
Yep.
And then we had talked a little bit about too, which again, I did not know about you, that you had all that financial debt from being a real estate investor, which I can see how that would stack up really quickly. What were sort of like, maybe like the 2 or 3 high level strategies that you used to get yourself out of that debt? Because again, a lot of women incur debt, or parents in general, through legal bills in the family system. I won't even tell you how much I've spent, right? So what are the top high level, maybe 2 or 3 strategies you have to help us get out of debt slowly over time, or maybe not slowly if we can?
Yeah, and that's why I mentioned it. If somebody is feeling very daunted by the fact that they have so much debt coming out of divorce, know that it's absolutely possible to get it paid off. But the first thing that you need is, like I mentioned, you need to know what it is. So making a list of all of your debts, who it's owed to, how much you owe, minimum payments, interest rates. You need to put that all in one place. Again, this can just be an Excel sheet. And then get a plan together to pay off the debt. So some popular methods are the snowball method or the avalanche method. A snowball method is where you pay the smallest balance first, and then you work your way through them. Meanwhile, you're paying the minimums on everything. The avalanche is where you pay the highest interest rate, and you work at it that way. But again, you're paying the minimums on everything. So that's one thing. Just know how much debt you have. The second thing is having a plan, a budget, a spending plan in place, is going to give you a lot of clarity as to how much you have to put towards that debt. And the third thing is paying it as soon as you get paid. So if you wait to the end of the month, and life has a way of soaking up extra money, right? So once you get stabilized and you have a plan, once you get paid, immediately put it towards that debt. Is definitely a key aspect in getting it paid off.
Yeah, that's great. And so we talked about this a little bit before today's conversation. You and some other financially minded experts who have joined us have talked about know where the money is. Like how do we even begin to know that? Again, in the process of divorce, both parties are required to submit a sworn financial statement that discloses all accounts and funds and everything. Not everyone is honest and accurate with those forms, unfortunately. So are there places that people can go to basically say, how much money do I have? Like, should they go to the IRS and say, what was the income? Or should they, what are the sources that they can go to figure out what the finances actually are before they start that process?
Yeah, no, great question. So if you don't have access to that, you want to track down tax returns if possible, pay stubs, bank statements, credit card statements, mortgage statements. That's all going to be really good information. If you can pull a credit report, both for yourself and for your spouse, that's going to give you a lot of information as to the debts that are out there. And whether things have been paid on time or not. As you mentioned, it's part of the divorce process, but not everybody is 100% with that. Another thing that you can do is if you go to the Social Security Administration, you can pull records on how much somebody what their income has been for the past X number of years. So that's another great way to kind of do some due diligence and see what the actual income is.
That's a really good one. Do you think it's better to go to the Social Security income folks rather than, tax returns or IRS? I know it can be a little bit trickier if you're not head of household as far as the IRS is concerned. So which one do you see as being sort of the easier path, or are they just kind of 6 of one, half a dozen of the other?
Honestly, I would do both.
Okay.
Yeah.
Great. Yeah.
If it were me, I would leave no stone unturned, right? Yeah. I would do both.
Right. Okay. Those were all of my questions and the questions from the Peanut Gallery. Morgan, I cannot thank you enough for your time and your wisdom and sharing your expertise with us today. This was huge. I know so many people are going to walk away from today's conversation with really simple tips to reduce their financial stress right away, kind of throw out the shoulds and create a really manageable plan. I especially love those buckets for savings. Again, I will put the link that Morgan has to open an Ally account. I think that you mentioned that they were doing like $100 credit if you open in the account. I don't know if that still exists.
I think as far as I know, yeah.
Awesome. Awesome. So I'll put that link down in the YouTube description for everybody. Morgan, thank you again. So folks know the next Lunch and Learn event is on May 13th with family law attorney Dorothy Walsh-Ripka, and she is going to be talking about how recent family law changes can affect our custody cases. So you're not going to want to miss that one. Definitely register if you haven't signed up for the newsletter. There'll be a link below to do that as well. Thank you so much, Morgan, and everyone who attended. We'll see you next time.
Right. Thank you.